talk about DADUs. How do you find these opportunities?
AD Universe is a tool online that you can go type in any property address, 400,000 of costs for your property.
What have you been seeing for comparable sales? Like
the difference is in a hot market, I've seen reses get bid up. I have done one solo project that was just completely myself. I have personally found myself a pocket builder. Are you an investor wondering how DADUs can fit into your real estate strategy? Or an agent who's struggling to navigate the Seattle market and understand DADUs? This podcast is gonna be for you. So, wanted to start this episode today. We're going to be going through DADU development in Seattle. This is supposed to be a guide for both agents and investors in kind of the basics for DADU development. I've been getting a lot of outreach lately from agents, from clients wondering what these DADUs are, how much do they cost to build, what's zoning like. And instead of having these one-on-one talks with everybody who's reaching out to me, I just felt like it would be really beneficial to sit down, do this episode, talk about what the future of DADUs looks like in Seattle, what we know now, and kind of just how to develop your team and understand DADUs a little bit better in Seattle.
Definitely. Yeah. Thanks, Tristan, for giving this knowledge to the audience. Not only are you doing this video for them, but I had all those questions.
Yeah.
I was that person that was asking, man, this kid has so many projects, so many properties. So what's DADU? First of all, let's talk about DADU.
Yeah,
what is
right.
that?
Let's start from the basics. So a DADU is essentially a detached accessory dwelling unit. And that's a bunch of fancy words that mean it's a small house, right, that you can build separate from your primary residence on the same lot that you have. And Seattle is really unique because it has a lot of processes for expediting permitting on these DADUs. There's other jurisdictions now in the US that allow this to happen. They're legal in some parts of California. New York just legalized ADUs and DADUs, but Seattle really has streamlined this because they have these pre-approved plans and standard plans that the city has already approved on most lots. And it just makes it a lot easier to go through the permitting process and start building those. So essentially, when we think DADU, we want to think small house, right? These have to be under 1,000 square feet based on current code. But it's basically just a small detached house that you can build in your backyard and use to generate more income. Or in city of Seattle, you can even sell those separately to a new owner and start developing some profit that way.
I love it. So question for you is, how do you find these? How do you find these opportunities?
Yeah, so this is probably the most common question that I get asked as we go through DADU development is how am I identifying lots and where am I finding a lot of these deals at? And honestly, there's a few things that we look at. First, we want to make sure the lot size is big enough. Right? When we're talking DADUs, we're talking about something that is essentially a townhome alternative, right? A lot of the buyers for these properties are entry-level home buyers, first-time home buyers, and what they're expecting is a lower price point, and a lot of them have been convinced their whole time in Seattle that they're probably only going to be able to afford townhomes, right? And what these DADUs do is provide an opportunity for these home buyers to potentially have more yard space, more open land, have a lot that is more to themselves, right? They're not sharing walls. So it's really a great opportunity for those home buyers. And with that in mind, the thing that really sells these units oftentimes is the yard space. So legally, you can build a DADU on any lot that's over 3,200 square feet. Personally, I don't look at any lots that are under 5,500 square feet. That's pretty much a hard cutoff for me. Unless we're starting to talk about really, really dense areas, maybe like Ballard, Wallingford, where the lots are really small and people are accustomed to that. I'm always looking to maximize the lot space first when it comes to what I'm looking at. The second thing I'm looking for is usually either alley or corner access, right? I like my DADUs to have separate entrance typically. You can do it on a flag lot if you have a big enough driveway to kind of go to that backyard. But ideally, alleys or corners are really what hit the spot, especially corners. A lot of the value and increase in sale value comes from that feeling of separation, right? Generating that feeling between the DADU and the primary. And if we're going and building it just in the backyard and you have to drive past the other house to get there, it's just not going to feel as separate, right? So alleys and corners are really what we're going for. And the last big thing is that I'm looking that there's no environmental challenges to building, right? Things that I shy away from 100% of the time, trees, right? City of Seattle tree code is insane, right? I am not trying to build my DADUs on a lot with a 20-inch diameter old growth tree in the middle of the lot. Like, that is just not worth the headache. You're going to get Seattle tree care activists and everything else, right? I had that at one of my Maple Leaf properties, had some people climb a tree. Like, it's just crazy. It's not worth it, right? There's plenty of lots out there that don't have massive trees. So unless you know that you have the firepower to deal with that and that's your gig, I would recommend as a first-time investor avoiding that.
Stay away
from that right away. Another thing, the city has a list of what are called ECAs, right? Environmentally critical areas. And there's a whole collection of them, right? You got peat settlement, you've got liquefaction zones, you've got steep slopes, etc. But the general gist of all of them is don't do it, right? As soon as you get into ECA permitting, it is an absolute nightmare, right? You get separate reviewers with the city, you get slowed down permit timelines, you get timelines that are honestly just going to kill your deal. And you don't have any guarantee that those things can even be built, right?
Yeah.
The city will add costs, make you get geotechnical reports, engineers, etc. Like, it's just not worth it when there's so many good lots in the city that aren't in ECA zones. So I never quite understand why developers choose to tackle those projects. I mean, maybe if you have an absolute slam dunk, but for me and speaking to agents and investors out there, I cannot recommend enough that you stay away from ECAs when you're building these properties.
Yeah, you helped me like figure this out. And what's the tool that you're using?
Yeah, so there's a few tools for this, but honestly, the city has done a pretty great job putting kind of an all-in-one tool together with something called ADUniverse.
Oh, yeah.
ADUniverse is a tool online that you can go type in any property address, and essentially it gives you all of the relevant information about that lot for building a DADU in a pretty streamlined UI, actually. They, for once, did something right technologically, right? Cities usually behind, but they nailed this one. So you go on there, it has lot size, right? It has lot coverage currently. It has tree canopy area, which is huge. It has any ECAs, and it also tells you if there's other ADUs or DADUs within your property. Now, I will say that hasn't been updated in a while. I'm buying a property right now that says there's 0 DADUs or 0 ADUs within like a half-mile radius of it. But I know that's not true because I personally own 2 DADUs within a half-mile of it. So clearly that tool is a little bit behind, so it's kind of funny. But it is cool to see if other people are doing and developing in that area. And it's a good tool to know that because it means, hey, there's probably money in these, right? If other people are building in that area, it's probably a solid area for resale, solid area for rent, and you might as well go for it at that point, right?
Nice, nice. So you're finding history, you're finding statistics to see, okay, what the numbers would look like.
Oh,
you already know.
Absolutely. Yeah, I'm always, anytime I'm building one of these, I'm always on MLS, Redfin, etc. I'm always looking at sale history, right? I change my filters in the area that I'm looking for to 2024 year built, sold within the last 6 months, right? And if you set your filters to that, you're always going to get new construction. For the most part, you get DADU comps, right? So you can pull those up pretty quickly in your area that you're looking at to just price out your specs.
Gotcha.
Yeah.
And how do you know if it's worth it or not? Like, how would you know?
Yeah, I mean, you got to start with your costs, right? So to give you an idea of build costs on a traditional DADU, right? Depending on what kind of design level of customization you go with, usually you're looking at somewhere around $350,000 in hard costs for one of these builds. Now, there's some smaller units or some less detailed units that you can do for less, 305 to 315. But if you're doing something with a garage with 3 beds and making it the most desirable unit possible, you're probably going to be spending somewhere around $350,000 in hard costs. And for those of you guys who don't know hard cost terminology, essentially that is the build costs, right? That includes contractor fee, that includes labor, and includes materials. It's anything that goes into the construction of your unit, right? Those are your hard costs. Now, in addition to that, you obviously have soft costs, right? Soft costs entail permitting fees, right? city fees, architecture fees, engineering if you need it, infiltration testing if you need it. Basically, everything that pushes you through to the point of permitting, and then everything to do the condominiumization to sell these units separately, right? Those are your hard costs. And typically I budget somewhere between 30 and 40,000 for hard costs. That's for standard plan usage. If you're deciding to go custom, that could be even a little bit more. Most of that's eaten up by lawyer fees, etc. There's some contingency in there as well. Like, I've definitely done deals for less soft costs than that, but it's just a safe place to kind of lump those in. So basically you're looking at somewhere around 400,000 of soft and hard costs combined on that. And then we need to start looking at financing costs, right?
For sure.
That's something that gets overlooked a lot in these deals. And for new developers, I think they struggle sometimes to understand that, right? You have, 400,000 of costs for your property, and they're looking at this like, oh, I can sell it for 825, 850 in my area. I'm like, no, right? You got to slow down, right? That delta between your costs and your value is not your profit, right? You have to factor in all of the debt service costs, right? We're usually taking hard money loans for these, 10.5%, 12.5% if you're a new investor. That's a ton of money over the course of your project if you're taking a year from start to finish to exit these, right? I mean, we're talking 70, 80,000 of holding costs. Not only that, but you have origination fees, right? You have appraisal fees, you have everything else. You're probably looking at 100 to 125,000 of hold and loan fees over the course of one of these projects as well, unless you're going all cash. But let me tell you, if you're going all cash on a deal like this, you should be doing more deals, right? Leverage is what we come here for, right? Like going all cash on a DADU build would be ridiculous. So if you're an investor out there doing all cash, let me know and let me help you maximize that, because that is not going to be your best way forward, right?
I get it.
So getting back to those loan fees, right? We lump in that 100 to 125,000. We're probably looking at about 500 to 525 all in. And if that's your type of loan fees, you're probably targeting an exit value on your DADU between 825 and 900 is probably what you're looking at. So the profit is still healthy, right? Somewhere in that, 300 to 375 range for the project, which is super respectable. Probably going to be close to 100% cash on cash once you start valuing your down payment on the front and everything else. But those are kind of the rough numbers that we're looking at oftentimes for one of these projects.
Gotcha. And you do 3, you're breaking 7 figures.
Yeah, exactly. Right. You have 3 of these projects a year. I mean,
how many have you done?
So this year I have done 1 solo project that was just completely myself. I have 3 projects that I'm partnered on as basically 50-50 partnerships with another investor.
Nice.
And then I have 6 projects that I'm working on for investors right now. And what I do with my investors is I have lots of structures set up with them, right? I have some of my investors that I'm working off a fee build type structure, right? Where they pay me on a fee schedule, right? After permitting, after framing, and then after build completion. I have a few of those going to just kind of streamline some of my cash flows as we go. And then I also have some that I've done equity partnerships with my other investors as well. And I really let them choose how hands-on or hands-off they want to be, right? I got a few partners who want to be in the process every day learning from me. I have other partners who are just like, here you go, right? Run it, like work your magic. And I love working with all of them, but that is essentially how I've kind of structured my projects and what I have going right now. Although I am about to close on another personal project, hopefully at the end of this month. So looking forward to that one.
So once you secure your lending, you find the money, right? You find a lender. What's the next step after that?
Yeah, I mean, once you have a deal and you have your lender, right? And let's say you are in that window of closing on your property. One of the best pieces of advice that I can give to new investors is to maximize their closing timeline, right? And this is something that older developers have used forever, right? If you talk to an old money investor, they love long closes, right? If they're buying vacant land, you'll talk to them and they'll frequently do 4-6 year-long close timelines. Because what does that do? It lets them control the property without paying interest, right? If you're under contract on the property and you're the buyer and you're prepared to go through, you're ready to go on that, right? And you can start getting surveys, permitting work, etc. in that close timeline before you've actually started paying any interest on the deal. And this is not something that a lot of DADU developers, I feel like, take advantage of appropriately, because they're of the mindset that they need to own the property before they can get started into these processes. And most of the time they're buying primary residences or, just traditional SFRs, which means 30-day close is going to be pretty standard, or maybe even faster if they're aggressive. But when you're dealing with 10, 12% interest, every month matters. Right? A month is $7,000 to $10,000, right? So you should be starting immediately once you're under contract on getting your survey done, right? Once you have that survey, everything else can really start getting the gears rolling. But without the survey, you're stuck. Right? That survey then you can send to your architect, right? Architect can start working on planning, get everything done. They can let you know if you're going to need other reports, right? Depending on lot coverage, you might need infiltration testing, right? To see how well your soil is absorbing water. You might need other forms of engineering, whether that be civil or structural for drainage. So you can get a lot of those balls rolling while you're under contract and not be paying interest yet. If I told you could be done with your project a month sooner and save $10,000, every person would be jumping at that opportunity. But yet a lot of developers aren't optimizing their window from going under contract to closing. And I think that's a huge mistake. So that would be the step once you have the lender secured, the property under contract, like get that survey, get your architect working, and figure out what preliminary things you need to do, right, to get that going.
You saved me some money. You saved me some interest by getting going immediately.
Yes.
Right after contract. So yes, follow Tristan's advice. This is amazing advice. So after that, how do they know like what they can build and what design? And
that's a good question. Yeah. So there's a few designs that kind of work on every lot. And there's a few that don't. So I'm going to talk first about two of probably the most common designs in Seattle right now, right? Which is the schooner DADU and the Arez DADU. Those are massively popular. The schooner DADU is a pre-approved plan. It's a little played out, honestly. Like people have built a lot of these at this point and they just aren't selling with the speed that they used to. But the ability to permit these in 3 or 4 weeks is mind-blowing.
That's crazy.
Right? I recently had a project that I had permits in hand to build before I closed, right? Which is insane.
That's unheard of.
I closed and started excavation 2 days after on that project. Like that's insane, right? So the schooner plan, there's a few times that I use that, and I usually use it if my investors have a really tight time frame, right? Sometimes an investor comes to me and they're like, I got to be out of this in 8 months. Like I need that cash back. I'm like, okay, we really have one option then, right? Because the rest of the pre-approved plans are just not useful. They're all pretty bad except for that one. So that becomes an immediate default in that situation. The other times, a lot of neighborhoods are really walkable and people don't really care that much about their cars. If you have a neighborhood that's super walkable, schooners don't have garages, that can be an okay option in those types of neighborhoods where you can just build it in the lot behind, people park on the street, walk back to their unit. Really, really easy to get that done. As soon as we start talking about lots that either have alleys or are corner lots, you should be defaulting to something with the garage every time. And whether that means you go custom plan, which I have a friend, Ian Love, if you guys don't know him, you should give him a follow, right? Ian Loves Real Estate. He goes custom on pretty much every one of his builds, right? He believes that is absolutely the way to go. Personally, I like a lot of the standard plan designs, but either way, going custom or standard, getting a garage is going to be huge, right? That adds a lot of value right now to people in Seattle, whether they have a car or not, just for storage, right? Or extra utility space. And it just makes it feel so much more like a house, right? As soon as you tack that garage on, you can get a lot more craftsman vibes, right? You can get that feeling of like actual home. And anytime you have something that feels like an actual house, your exit value is going up, right? And that's really what we're after, right? Is that additional exit value, hopefully even generating bidding wars on these DADUs, right? If we get a hot market. And something like a schooner just isn't going to develop that much interest to get a bidding war, right? You're not going to have 4 buyers on a schooner ticking it up in increments, but on an Arez or a custom, you definitely have the potential for that. So if you're okay with the longer timeline,
how much longer would you say?
It's going to be about 4 to 6 months longer, honestly. Permitting for these standard plans like an Arez, which is a 3-bed, 2-bath with a garage, that's usually around 4 to 5 months. The architects who work that plan, Yen Design, they say it can be done sooner, but I would be upfront that they're absolutely backlogged right now with builds, right? Lots of people trying to develop. And if that's the route you're going, you're just not going to get a ton of their full effort up front. So you're going to have to extend that timeline probably to 4 or 5 months for permitting, I would say realistically. And then again, 6 months to build, month to exit. So you're probably looking 10 to 12 months on that. If you go custom, that timeline is just going to be a little bit longer, probably 12 to 14 months is what you're looking for. So if you have a lot that supports high exit values, it's definitely worth taking that time. If you have a lot that doesn't support those higher exit values, maybe speed is the play, right? And you should just be building your basic commodity housing and getting in and out of the deal quick, right?
Gotcha. So, question. You said that the schooner doesn't sell as fast, right? So,
yeah.
What have you been seeing for comparable?
That's a great question.
Yeah.
So, typically, I see a difference between schooner and a res models of somewhere between 50 and 75,000 in a neutral market, right? Where the res is getting 50 to 75 more.
Okay.
But the difference is in a hot market, I've seen reses get bid up 50, 75, 100 over list. And I have never seen that with a schooner. Like, that's just not what's going to happen there. So if you're looking for boom potential, the schooner's not the play, right? It's a safe kind of just like, I'm going to plop this down. Build costs are going to be low. It's going to be fast. And I'm going to get in and out with my 150 to 200. Wash my hands of the deal and be done, right? It's not a 350, 400K, 100% ROI type play. That's just not what you get from a schooner. So you need to know your exit strategy and your risk tolerance to kind of decide that as well.
I gotcha. And I feel for me personally is that the more patient you are and not fast money, not money. And if you can stay patient, hold on, it's going to pay off.
I agree.
In the long run.
I agree.
That's what I've learned in any investing that I've done.
Yeah.
So
absolutely.
I'm doing the res route, the longer process.
Nice.
Because I believe, hey, patience.
Yeah. And I mean, you have a great lot for it.
You helped me actually. So, I reached out to you because I knew you were doing this multiple times. I said, hey, Tristan, is this a lot that's worth it?
Yeah.
You took a look and we both looked at it online. You said, dude, this is a home run.
Yeah.
Alley, side access to like everything.
And great location, right? Right near Seattle University, like super high in demand area. So
it's pretty central, right?
Yeah.
Yeah, it's pretty central. But after now that you've gotten through all the design and everything that, just getting started to build it, how do you find the right people to start?
Yeah, that's really the secret, right? Yeah. The right builder can make or break your deal. So I would say I have personally found myself a pocket builder, basically, right? I have a guy who does almost all of my builds and he does not do work for anyone who's not associated with me right now, right? And that's something that I needed to get because of the volume of builds that I'm doing right now. I've used other builders before who have lots of other builds, and I still use that builder that I formed a relationship with already. If you don't know him, Chris Myers, right? He is a great builder who does a lot of fantastic work in the Seattle area. Chris is extremely professional, extremely quick. He has a schooner that he's working on for me right now that we're going to be done under 5 months on, which is amazing, which means from permit start to finish, we're going to be in and out of the whole project in 6 months, which is mind blowing. Chris does great work. If you want a super hands-off build experience, I cannot recommend him enough. I'm probably not going to share the name of my other builder on here because that's my pocket guy, right? I gotcha. I need to keep that a little more low key. But
how do you find a pocket guy? Yeah. How did you find him?
Holy crap. This is a heck of a story. So it's actually a scam led me to him, actually, which is crazy, right? Here's what happened. I had just bought myself a primary residence and I was trying to get the AC replaced. And long story short, the previous owner had built a closet that extended into the garage and it blocked the furnace, so it wasn't accessible. So the guys came in to try and put the AC in and they were like, hey, you gotta rip this closet out, right? We can't, it's not up to code. I was like, okay. So I go on Thumbtack, I'm typing away, trying to find a contractor, right? I'm a new homeowner. I don't know what the heck I'm doing. I'm not building DADUs yet. Like, I don't know. So I find this handyman on there. I message him. I'm like, hey dude, like, can you come rip this wall out and like patch it up for me, fix the wainscoting and everything else. So he comes in. He's like, okay, it's probably going to cost like $750 to do this. Can you give me $400 up front, $350 when I finish up? I'm like, that seems reasonable. Like that's normal contractor stuff. I give him the $400. He takes a day. He demos the whole wall, rips everything out, loads up his truck, right, with a bunch of the material that he tore out. There's a giant hole in my office wall leading into the garage, and drives off. He's like, I'll see you on Monday. I'm like, okay, perfect. Sounds great. Monday comes, nothing, no show. Tuesday comes, no show. Wednesday, no show. Dude's ghosting me. I haven't heard a thing from him, right? This goes on for like a week, and I'm like, I can't just keep this hole in my wall. So I start reaching out. I'm like, okay, I just got to eat this. Like, this guy ripped me off. And I go back on Thumbtack. I start typing. I'm like, all right, this guy has pretty good reviews. This guy, Tactol LLC or whatever. I'm like, yeah, let's hit him up. So I text him, and now my contractor, now my builder, messages me back right away. He's like, yeah, I can be there today. Like, I got another job I'm working on, but this is small. Like, I can get this done for you. Like, sorry that happened. I'm like, I don't know what it was. Like, normally I wouldn't be so trusted, but he just felt like a good dude right off the bat. So obviously risky, but I was at work. I gave him my garage code. I'm like, hey dude, go in, like, fix it up. So he goes in, he fixes up the wall, and everything's done. And he just leaves, and he didn't collect any payment from me. He fixed the whole thing and just trusted that I was going to pay him. And honestly, like, it might not be the best way to do business for him as a small business owner, but for me, that level of trust goes a long way with a person. Like, if you're willing to do a bunch of work for me and just trust me from our conversation that I'll pay you it ended up being almost $1,800 to fix the wall. The other guy was clearly low, and just trust me to do all that work without anything up front. Like, that's the type of person I want to work with. So he did a bunch of remodels, flips for me going forward. And he finally came to me. He was like, I want to do a build for you. Like, I can do it. And you know what? Like, he trusted me. I trusted him. And he built a unit for me. And there was a little bit of learning curve with subs and other stuff. But after he hit that one, like, we were good. Like, he crushed it. He built a beautiful unit for me. We've straightened out some things with those subs now. Process is getting streamlined, and it's totally paid off to bet on him and his ability to get that done for me.
Man. Talk about reputation,
right.
Talk about relationships and everything that you just built going along with this guy. Wow.
Yeah.
That's amazing. Cool, man. So you found your guy, you found your pocket guy, and so now it's streamlined. Do you hold? What do you do after these are built? Or do you hold? Do you sell them? What do you think?
That is a great question. So a lot of people sell, right? A lot of people sell and take that quick money. But like we said a little bit ago, the quick money is not where you get rich, right? Not where you get wealthy. True wealth is holding assets, right? And that's what we want to do. So up front, I have kept every dadu that I have built on a personal project for myself. When I'm with partners, sometimes I will sell those off. Holding rentals in partnerships is not my favorite thing. I am of the mindset that I would rather own 100% of 5 doors than 50% of 10 doors, right?
I'm with you.
I don't want the constant relations, the stress, the concern over other people's thoughts on my investments, right? I don't want a partner who wants to sell because they're in trouble when I'm doing great and want to hold and miss that next wave up in real estate because of that, right? People usually get in trouble right before the surge. That's how it goes, right? You got to weather that bottom to get out of there. So I want to own all of mine fully. So typically in partnerships, I sell.
Okay.
That's just my kind of rule of thumb. I don't love keeping them in partnerships. I would rather own everything. So
that makes sense.
That's where I'm at with those. I keep all my personal projects and I sell my partnerships. That tends to give me a nice mix of cash flow between revenue coming in from sales, but also from long-term kind of wealth creation with that. And right now I have 6 rentals. Just closed on another personal project, so that'll take that up to 8 next year once those finish up. So we're just kind of moving through those and trying to accumulate more in the portfolio.
Building a monopoly out here.
Exactly.
And how old are you?
27.
You're 27, and when did you start?
I started building my first dadu when I was 24. So it's been about 3 years.
And now you're working. Look at that.
Yeah.
8 already? That's crazy, man.
Yeah, they build fast. And I mean, one of the other things that can't be understated, like if you're not maximizing your tax advantage, right? That's a huge thing with these. And with these DADUs, you don't want to pay that income tax, right? If you build and sell, you're paying income tax on those gains, right? You need to hold for at least a year to shift that into capital gains. And that's a hugely important factor. I will say potentially the best strategy dollar-wise for these is typically to sell the primary, keep the DADU, right? The way cost basising works on these projects is that front home, right? Let's say you buy for $550, right? And then you build a DADU that's worth $705 in the back, right? You sell that front home, let's say for a little bit of depreciation, $525, right? What you have now is you're pulling your down payment out. You're getting all your cash back. You're taking a little bit of a loss that you can write off against whatever other capital gains you have. And then you have this DADU that your cost basis is $400, right? Hard costs, soft costs, etc. But it's worth $705, right? So if you sell that and profit $300, you're paying income tax on that. 40%'s gone right away. Like that is not for me. So what I would rather do is keep that DADU, wait, right? All of the profit is in the DADU, right? So you can sell one and get your down payment back and keep all the profit still without paying tax, right? So essentially you've recouped your investment right away, but you're still holding the profit portion, right? It's really just more burring for those of you guys who are familiar with that method, right? And fortunately for me, what's happened is I've actually built enough equity with the DADU builds that I've been able to pull out my down payment and keep both properties, right? Because if I'm, buying or refinancing that DADU and getting a loan for $525 or so and my build costs for $400, I'm pulling out $125. That's going to give me part of my down payment on that $550 build. Those are numbers from a project that I actually just finished last year. Sick. So I'm able to pull out my down payment after and still keep both. But if you have a deal with a little less meat on the bone, it might be worth selling that front to pull out then and keep the profit in the DADU.
That makes sense.
Yeah.
Dude, I love it. Leverage.
Yes.
And how can people learn, how can they be connected to you? So they can learn more. So the process.
That's a great question. I'm always excited to talk to new investors, whether they're looking for help, for partnership, for advice. I love working with new investors. They can reach out to me via Seattle. I'm posting tons of DADU and ADU information on there constantly. You can also reach out to me just via phone. It's in my bio, via email, right? I'm always ready to talk real estate with people. And not only that, but when you reach out, you can expect just great information, great conversation, and just a lot of fun times.
Genuine person that provides a lot of value. And honestly, listening to your content, watching Tristan's content, I learned a lot before even getting our own DADU project. So I was learning a lot from everything that you were just mentioning in all your short form videos.
Thank you.
And so you'll get a lot of value from Tristan. If you want to reach out to him and partner with him, he's the man to help you build your wealth. He is.
That's what I do. That is what I do.
I love it, man. Thank you. Thank you so much. Yeah.
Awesome.
Cool.